trades. If you have not like and subscribe, don't forget to like and subscribe. Click that bell button so that you get all the updates about pretty much all my latest video. So let's get it started. So today's topic is basically using Theta Strategy to kind of generate like extra income or extra stocks, right? That's what I basically do a lot of the times, like basically getting free stock using the Theta Strategy. So how do you do that? Like what do you do when it doesn't work as you expected? So kind of I'm gonna talk about credit spread and also selling puts and how I fund and actually I get a lot of stocks. So basically I don't buy using my money, but whatever money I make, I use that to fund my long-term portfolio. So one of the example is I like Neo, right? So if the EV gonna be there, I think the Neo will be a big player since they already have it. They have the scale. They are kind of ramping up rapidly. I think they had 30-40,000 this year, so they can definitely do 150-200,000 next year or so if the kind of demand rise, right? So if the EV is gonna take over, I'm pretty sure there's not going to be a one winner take all, as always. Most of the times you have kind of Apple, so you have Android as well. So let's get it started, right? Let's get it started, and here we go. So yeah, I was kind of looking at the ozone chart. I kind of told a lot of people to get in ozone around 40-45. It was kind of slipping, but finally kind of bouncing up nice up today. So but today we're gonna talk about Neo, right? More than Neo, kind of how I do that. So Neo was kind of hitting all almost hitting 60 66.9. After that their Neo days, they kind of release the launch of their new sub, so kind of had a really nice bump. I already own some leaps for Neo and also have some shares, but I'm always trying to add on the dip and whatnot, right? So one of my strategy, what I do is, so Neo, after the news, it was really high, but you can see that kind of sold off significantly, right? Sold off significantly right around 50, yeah, right around 59 or something, right? So it was there. So what I did was, when it was that, I sold put. So I sold basically a put. So what is selling put? Selling put is basically, let's say whatever the strike you choose. So if you have times 100, so basically here in this case, I think I sold 56 or 57. I totally forgot, but it was 56 or 57. So I need to look into that, but 56. So when you sell, what you are telling is like, if the Neo does not go there, you collect the premium. If it does go there, you basically buy the 100 shares at that price. Like if you had your strike like 57, you'll buy 100 shares at that particular price. I know it may sound confusing. If it sound confusing, there's a link in my description. Check out that, check out the course, so I explain everything, and there's a lot of free video on YouTube too. You can do that, right? So what I do is, did was, so Neo was almost at 60 something, and I sold 56 or 57. So that means by this week, if it doesn't goes 56 or 57, I collected 200 something. So basically I collected 200 something, $250. So $250 is almost 5 Neo stocks, right? Around 50-60, right? If you kind of about that. So I sold 2 of those, so that's a 10 stock. So what I did was, the next day it kind of opened up, and it opened up nicely, right? When it went up to 64, I was almost up 60 or something, like 60 or 70% already. So basically, when you are selling puts, if the stock go up, you make money. If it goes down below your strike, you will be assigned the shares at that price, so you collect. So what I did was, when I sold that contract, I almost collected like $300, and with that I just got 6 Neo. So basically I'm done with that trade. I have a Neo stock, so basically it's not an option, nothing to worry about. I have those 6 stocks beside whatever I had, right? Again it was kind of dropping that, and I think again when it was no, I think it was year, yeah, 61. Again at 61, I thought it probably gonna bounce back, and I sold another contract, right? I did the same thing, and I sold 56. And what I did was today it was almost worthless, and right at open I closed that, right? I closed that. I made another 400 or something doing the same contract. That's 600 700, right? So that's almost 10 to 12 stock free. So what I do is kind of use that strategy, kind of close open close, and put a stock is long. Option is always risky, right? If it doesn't you get within that period, you are done, right? But basically using some capital, like you do need some capital like 5 to 10K. So it's kind of hard for small account, but I'm gonna go about kind of how you can do in a small account using this spread. But kind of let's clear. So if you have a good capital, let's say you have 20 30 40, you can actually do that and actually buy the stock will be there for long. I'm not touching, I'm just putting there, right? So I just added 10 stock this week in a neo only. I do that for a lot of other stocks too, and I keep building my positions, right? So that's some things I want always think about long term, right? Short terms you can have up and down, but you need to kind of know how you can take advantage of volatility, the short term volatility, and make a long term money, right? So that was there. The other thing, so with the other thing is, a lot of people is like, okay, let's say you sold, let's say you sold like let's say neo was like, maybe you sold at 66, you are at 60 and you will be assigned stock at 60, right? If you sold 60 put, so what are you gonna do, right? There are a lot of options. One thing you can do is you can roll it over 1 week or 2 week, right? So what that does it, a lot of platform kind of show you how to roll over. Basically you're closing that contract and opening the another positions, but you can kind of reduce that, right? So you can reduce it to, for example, let's say 50 or something, and make still get some credit. Just you may have to go 1 week or 2 week back, and that's about it. So that's one option. You can always roll it out, right? And go 1 week or 2 week out and roll it out. Other option is you can close it out, right? Sometimes what I do is, like, let's say you are getting credit, $200 credit. So if you are losing at least $100, right? So if the value becomes $300, that means like you are losing $100. So you want the value to decrease, not increase. If it becomes 300, you started losing $100. At that time I may close it out, right? I lot of people just try to kind of wait till they go expiration. The thing is, like with the option, you don't need to wait till expiration. You can always close out, manage your risk. So if you do that, that's kind of helps you out. And the other things you can do is basically, yeah, pretty much close it out, roll it out. Close it out, you're done with it. Roll it out, you do have some risk, but basically if it doesn't work, probably want to close it out. So other thing is, like, what to do, you have a smaller account, right? So if you have a smaller account, you can do a credit spread. So I'm gonna show you how you do that, right? So neo, for example, let's say I did that with exactly T-Doc. So neo today is 15, so let's do 22, right? So we are not looking at single, we are looking at vertical. And if you look at the vertical, I think I had, so this is example, right? 22 gen. If you do put a strike for 50 strike, you get 55. That's one neo. If you sell 10 and don't assign, that's 10 neo, right? You do need some capital, but I'm gonna so if you have a smaller account, what do? You do vertical, right? So spread vertical. So vertical, we're gonna adjust kind of vertical. So let's say you want to do a put credit spread. So basically put credit spread, you want a stock to be above your upper strike, right? In a put, you want, if the stock is above that price, you collect all the premium and you can do whatever you want to do it. And the same strategy, right? If it goes above like one half, you can cut your loss, or you can always roll it over too. But I don't like to roll over. I'll just cut it out if I'm thinking it's kind of getting risky. So for 22, let's look at we can always change. So we are selling, so basically credit is selling, you are selling the debit spread, right? This is a 10 contract, this 50. So so you are selling the higher, buying the lower. So what we can do is we can go maybe 50, maybe 45, right? So 40, 45, and we can do 50 maybe. This one 50. Right, right. If you sell 40 45 credit spread, you will get about $38 as of right now, right? You'll make $38, right? If you have 10 of those, right, you do need $500 collateral for this, since your risk is $500. So basically what it's saying, we can kind of, yeah, so basically what you're saying is your max loss is 4620. Max loss is huge, but the thing is, like, a lot of people's like, your probability of winning is pretty high. We can actually analyze like what's your probability of winning, but basically what's saying is like, you can lose that much, but the thing is like, you should never let it, unless you have a really bad day and it just gap down. That can happen with the stock and everything, so you cannot really control that. But other than that, your probability are pretty high. And here your max loss is 4620. So it does seems, but if it's your max profit is 380, if it goes to 5 or 600 700, you should close it out, right? Don't even worry about it, right? If you close it out 700, you just lost 380 because you already got 380 credit, right? So even if it that's like the absolute worst case scenario, it can happen if you do not do that correctly. But if you are new, I would suggest maybe try with the one and maybe see how it goes. Pick a stock, not too volatile one, but you get the idea, right? So you'll be getting 380. So if it works in your favor, and if neo does not goes to 50 by next week, you collected 380. That's what, if it's around 50, that's like what, 6 7 neo for free. So you just collect, build your portfolio, and think about it. If you can make 8 to 10 in a week, in a 10 weeks you have 100, right? In a 10 weeks you have 100. In a 50 weeks you almost have 10 times 50, you have 10 weeks 100. So 50 500 stocks of neo, that's awesome if you can do that. So so you can actually play around with this and see how it works. um, I was kind of thinking of doing that, but it's 4, so I cannot really do, I guess. But I think this is pretty good, 40 45. And actually you can actually analyze, also you can analyze trade here. Okay. Okay. Oh, yeah, this is neo. So there's your, um, basically there's like pretty much high chances the stock will be in this area. So basically there's 40 50 60 70, almost 80% of the chances like you will be out of, either it will be, so there's very less chances it will be below. So your break even is basically 49.62, and below that's your risk, but your probability is basically less than, there's probability of this is 10, almost about a half. So really less chances, about 5% you can, it can be. But again, I'm not saying it's not gonna happen, it can definitely happen. Neo is pretty volatile, its IV is pretty high, but you gotta kind of look at your risk profile and kind of probability analysis, right? So it's 21. There's like so there's yeah, it can be 47. So 47, there's high chances to live 47 to 65. That's for 22. So you can actually kind of look into it, maybe go 45 to 40, and you can make you can even change it to kind of whatever your risk profile and make it. For example, if we can make it like instead of 50 45, if you do maybe 40, we can even do 40. Probably not gonna get a lot of money, but I think it's still pretty 40. And let's do 45, right? So 40 45. Okay, that's weird. I don't know why it's not traded. So I'm gonna delete. Okay, I'm gonna go to trade and 50 45. So I'm gonna do 40. 40. That's weird. So what? I guess I'll just change it to 41. Okay. Not sure why it's not traded, but we can see that right here you get very less credit, about $9, but since it's really far away, but you can adjust and see what's your kind of risk profile and whatever you make, right? Make sure. And also a lot of times you do is like you see right at the support and kind of bouncing up, maybe go really near. You can kind of combine your chart with the probability and whatnot, and it can really work well, and you can actually make a lot of the stocks for your long-term portfolio. Yeah, that's about it. If you have any question or comment below. Other than that, have a great day. Thanks.